Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, May 8th at about 2:30 p.m. Eastern. Well, U.S. stocks are gaining so far today very nicely after data showed the economy lost fewer jobs in April than feared due to the coronavirus crisis. Official figures showed non-farm payrolls plummeted 20.5 million in April, their steepest plunge since the Great Depression, but the number was still better than the 22 million forecast by economists polled at Reuters. Also adding to the optimism today is an easing in tensions between Washington and Beijing, so that's always good news. Now let's go on to three charts that could give us some insight into the week to come. Now, when I captured this chart today, the SPY, the S&P 500 spider, which of course follows our S&P 500 benchmark index, the SPY was trading at $291.48. That's about $29.14 on the S&P 500 itself. Now, we know that since the all-time closing high on February 19th at 338.34, since then, if we look back over here to where we're trading now at 291.48, the SPY is now, and I'm going to say only because it was a lot more dire before, it's now trading only 14% off of its highs. This benchmark has clawed its way back into correction territory from bear market territory when it was down here at 218 or about 2180 on the S&P 500. It had a March low at a March 23rd low, I should have said, at 218. And now it's clawed its way back up, which is a good thing. And for the last 3 weeks, the SPY has been trading in this range here, kind of not exactly, but pretty close to consolidating. Every time it tries to make a move up, it falls back. But then today it gapped up again, and you can see I drew a couple of trend lines. This trend line's from back here at the end of March lows up here. That trend line has been broken. It's okay. The SPY is still in an uptrend. Now this second blue line that I drew, trend line, short-term trend line, now as you can see is pretty much following the red moving average, which is the 20-day moving average on this chart. So it has moved up. We can see here in the very short term that the SPY has made a higher low. I always like higher lows because higher lows say that buyers are not letting price return and retrace all the way to the prior low, which was at 272. In this case, they picked it up at about 280. So we had what we can call here a buy the dip mentality. And today it's back up trading, as I said, at over $291. So nearby resistance, that's back here at about 295. We can trace this over. So nearby resistance is at 295. Of course, we have the 200-day moving average coming in here at $299.76. So we're going to have to see if and when, and hopefully it's if, the SPY gets up to about this 299 level. Can it burst right through and move higher? And of course, that remains to be seen. That remains to be seen. You know, there's so much out recently, so many comments out there about how hard the market is going to crash. Now, we've got one side of the camp that says the March lows were the low and that's all there's going to be. We have another camp that insists that the SPY or the S&P 500 will come down and retest those lows. We have the camp that says it'll go below the lows. And of course, the one that says, no, it's going to keep on going higher. The truth is that it's guesses by everyone, no single person. I don't care how many black boxes they have or how much education they have. No one on the planet knows where the market's going to go next. So please do keep that in mind. What we've seen here going on, we have the resilience, I believe, in the market comes from the repetitive monetary and fiscal stimulus that we have seen over the last month out of Washington. So we've had that stimulus. We also have a lot of FOMO going on, fear of missing out going on, which every time this SPY starts to fall a little bit, the fear of missing out people come in, and it's along the same lines as the buy the dip mentality. So what I think we should do here is keep track of our protective stops. We don't want to give back any money we've made here. And be sure to trade what you see, not necessarily what you think will happen, because we're in an area right now where either, obviously price goes up, down, and sideways. So we're in an area right now where if it does start to go down, we want to keep any of those profits that we have made. So please be careful here. But we can say the SPY is in an uptrend, and of course, that's a good thing. Our next chart is a chart of the Invesco QQQ, symbol QQQ. This is a daily chart, of course. And as you know, the QQQ represents the NASDAQ 100, a very important index in this market. Its holdings include the top growth stocks or momentum stocks, if you want to call them that. Now, I captured this chart today. The QQQ was trading at $223.97. Its all-time closing high was back on February 19th at $236.98. So guess what? The QQQ is now only 5% off of that all-time closing high. That's pretty darn impressive. We're no longer in correction territory with the big tech stops, with the QQQ. Now, we have some nearby support here at 220. This was resistance, was resistance and now has become support, and down here at about 211 or so. Now what we want to watch to the upside, you see this, we've got this gap that came down here in February where the Q's gapped down. Now we are right now at 223.97. We're just a scooch above this resistance line here. So if we drew our line across, actually we'd be right there. So the Qs are hitting this resistance at 224 right here, pretty close to right now. Now gaps, we have all different kinds of ways of talking about gaps, or spaces where price does not take place, or trades I should say do not take place. So this can act as resistance right here. We can get very technical and note that the middle of a gap can act as resistance. And we can note that the close on this day could act as resistance. And that was at 220, let's see, about 230. Yeah, exactly. Excuse me. That's 230 there. So we actually can see resistance here from 224 to 230. Now, if price goes up and fills that gap, it's going to be fantastic. Whether it can do it or not is a whole nother story. What we do note here, and the same thing happened on the SPY, is that every single day in the last 4 days have been dojis. A doji is a cross like this. It can be a rest day, or it can turn into all different kinds of candlestick technology signals. But right now, these dojis are saying that every single day, price isn't closing on the low, not closing on the high. It's just kind of a neutral day. But in fact, every day is a little higher, so that's good news. We just want to be careful here because these are kind of non-committal days, even though they are moving higher. So continue to watch the QQQ, continue to see, can it move up over 224? That will be very impressive if it can. If it does, remember it may have some resistance at 230. If it goes beyond that, who knows? Maybe it goes back to its all-time highs. Also keep in mind, of course, that price could move lower. So please keep your stops in, and again, trade what you see, not what you think will happen. Our final chart today is the VanEck Vectors Low Carbon ETF, symbol, aptly so, right? SMOG. This is the low carbon energy ETF. It has 30 holdings in it. It's a global index, so it has companies from all over the world. Top holdings in this are Tesla. So by the way, if you want to be in Tesla and you think the price is pretty darn high, this is one way of actually owning Tesla. Microchip, Ametek, Eaton Corporation, and Vestas Wind Systems are some of the top holdings. Now the SMOG, it's funny, the SMOG made a recent high on February 19th at $88.59. Then, like everything else, it fell dramatically down to $49.81 down here on May 18th. Now, since that time, it has rallied here, but notice it's had pullbacks along the way. So it's back up about 43% when I captured the chart today. It was trading above its 20-day, its 50-day, which is the green line, and its 200-day moving averages. Again, note the 20-day moving average here is acting like a trend line, actually pretty much like it did on the Qs and the SPY. However, the SMOG is moving up at a little more conservative angle here. This uptrend is a little more conservative angle. Now, again, it's trading at $72.23. If it remains positive, I may buy a small position in the coming week. If I do, I'm going to place my initial stop at $67. And when and if the SMOG, here's resistance right here. There's a little more right here as well, nearby resistance. And then we have another gap over here. So if and when the SMOG, the SMOG, moves above 73.50, I may add to that position. And of course, by then, my stop will be turned into a trailing stop. And of course, as I always mention to you, please know that if the market rolls to the downside, I may exit the trade early before it reaches my stop. And that's because we're still in very dicey territory here. You may, well, with the market in general. So you may, if you like, want to keep an eye on SMOG in the coming week. And now, please know that I've temporarily suspended my usual list of next week's economic reports to briefly touch on the topic below. If you want to see a calendar of the economic reports, please go to toniturner.com, click on education, and then economic reports. So this week in our market mental and emotional approach, we're going to ask ourselves this question. When I trade, do I enter at the opportune moment and then remain patient for the trade to unfold over time? Do I enter and then remain patient for the trade to unfold over time? Or after I buy, do I move directly into feelings of impatience, silently urging the price to move higher so I can take profits and go on to another trade? Now, most traders, and I know this because I am one, most traders are A personalities. We are a very anxious bunch, and we want everything to move forward the way it should, in our opinion, quickly and in an organized fashion. We tend to push ahead no matter what stands in our way. We are determined to get where we're going and as fast as possible. Moreover, as traders, we are used to assessing situations quickly and then acting even faster. We're used to executing trades in nanoseconds, and you all know this. So it makes perfect sense that once we're in a trade, we are impatient for the asset or the stock, whatever it is we're trading. We're impatient for it to move higher, or of course, if we're selling short, we're impatient for it to move lower. I used to have a trading teacher way back in the old days who said, if my stock doesn't go anywhere in 7 minutes, I sell it, I get out. Well, the market, as you may know, may have different ideas. She may decide to amble aimlessly for hours or even days, and your stock may wander as well. Look at the last 3 weeks in the market. Still, in most cases, if you've chosen well, and if there's no negative news associated about the company and no negative news or of importance hitting the market, and assuming your stock hasn't touched your stop loss, most of the time it will serve you to wait it out. Impatiently hopping in and out of stocks without any reason except you don't think they're going anywhere can be costly because, as you may know, you take small losses from every trade, most of the time called slippage. So please, please, people, strive for patience in your trading. It will make you a better trader and you're going to take home bigger profits. And now, one more thing. For 1 more week only, we are now offering a 20% discount on all of our online training programs. So if you would like to just go through the programs and see what they look like, please do so. You can do so at the link below, and at checkout, if you decide to order one, please enter coupon code 20product that you see right here at checkout, 20product. And don't worry, this is all on the website. So just go to toniturner.com, training programs, or simply click on the button below. All right, you guys, please stay safe and healthy out there. Please keep green on your screen. Until next time, this is Toni Turner, and this is The Market Now.